Recently, one of our member services team here told me I was looking calm given what is happening in markets. The situation in the Middle East is generating a lot of news, causing a lot of ups and downs at the moment. And I wanted to do this update because I don't want you to feel stressed about your super. The truth is, investing is always about ups and downs. As investors managing your long-term retirement savings, we tend to view major events like these a little bit differently to what you might see on the nightly finance reports because, firstly, we have seen so many events that seem historical and world-changing at the time, but don't have a massive lasting impact on markets. The first Gulf Wars, the Asian currency crisis, the tech crash, the September 11 attacks, the Asian tsunami, the GFC, Trump won, the total shutdown of the global economy for COVID, Russia's invasion of Ukraine, Trump 2, the Liberation Day tariffs, and now the attacks on Iran. A lot of major world events have happened over CBUS's 4-decade history. Even with all this volatility, our growth, My Super option, has generated an average annual return for our members of 8.91% since our inception in 1984. To put it this way, if you had $10,000 invested in this option in 1984 and you did nothing else to it, no little top-ups or extra contributions, that investment would be worth north of $300,000 today. The second reason we see events like this a little bit differently is that we see market correction as an opportunity to buy potentially undervalued assets. When events like this shake up global markets, there is often a lot of value to be found. High-performing stocks come back to earth a bit, and good, solid investments are sold at a discount. Now, the next time you see a big red headline saying bad things about the markets and start worrying about your super balance, here are some steps you can take to make sure you are thinking clearly. Stop. If you are rushing to switch your investment options, you are probably making an emotional decision. Investing shouldn't be about emotion. That's gambling, and you should never gamble with your retirement savings. So before you make a decision that you might regret, stop and then pause. Take time to take in as much information as you possibly can before you make a decision. If you are switching options, you need to understand that they might crystallize an investment loss, essentially meaning that you are selling while the market is on the way down and locking in those losses. If you logged onto realestate.com one day and found that your house was valued at 10% less than the month before, you wouldn't rush out and put it on the market. That's a good analogy for switching super investment options during a market downturn. And the cost of missing the upswing in markets can be significant. Recently, investment firm Schroders released research showing that by simply missing the 10 best days in the global stock market over the previous 34 years, your returns are cut in half. As humans, we are programmed to try to avoid short-term harm or danger, but we aren't as good at recognizing long-term opportunities. So pause and take the time to understand everything you can about the choice you are making. If you have any questions or need reassurance, seek it out from a reliable source like your super fund or a financial advisor. Don't rely on what some bloke is saying in the lunch shed or on your footy team. And unless your brother-in-law is suitably qualified, feel free to ignore him at the next family barbecue when he's mouthing off about what you should do with your super. There is good information and good advice available. Check the website, attend one of our webinars, or call and speak to one of our advisors.